Warren
big time.
Buffett's famous quote, be fearful when others are greedy. They've been very greedy the last few years, but then the opposite one of that is be greedy when others are fearful. And there's a lot of fear right now. So now's the time to be greedy if there was ever a time.
Hi, I'm Tim Bratz, and every week I sit down with the top influential entrepreneurs in the country to discuss how to leave a true legacy in all things happiness, health, wealth, and wisdom. This is the Legacy Podcast. Hey guys, welcome to the Legacy Podcast. I'm your host, Tim Bratz. Today I'm here with my longtime friend and multifamily investor colleague, actually all commercial real estate, Rod Khleif. You guys probably know Rod from his multifamily boot camps and a lot of his coaching, a lot of his online presence. He's got his own podcast that is filled with great insights. Rod, great to see you, man.
Oh, it's so good to see you, my friend. It's been way too long, brother. It really is a real
see
treat.
Each other. It's been,
Right.
hey, we've all been trying to keep our friggin' heads above water. That's really it. We're trying to survive.
Oh my God.
It's been a rough couple of years.
Yeah, the water's going out and now we know who's naked, and there's a lot of them, a lot of nakedness out there right now. Good God.
Well, we were talking like it's a lot of, obviously all the new guys, right? A lot of the new guys who never really built the muscle on how to operate, on how to raise money, on how to like do the right thing when you get affected by one of these adverse market cycles. All of them totally cleaned out, right?
Yeah.
That was obvious and what you would expect. But there's a lot of guys like you and me, and there's people that we were talking about with tens of thousands of doors who just bloodied up, man, beaten, battered,
private jets,
in the streets.
Yeah, private jets and everything else, and they're losing properties. I'll tell you, I have a lot of newbies in my coaching program, and I'm blessed to say I'm only aware of one deal that's been lost so far. Now, there's some that are in trouble, that are struggling, and they've gotten mods and deferrals and capital calls and things of that nature, but only lost one so far. Thank God, knock on wood. But it is really tough out there, and sales are down 90%. There's $1 trillion worth of debt coming due by the end of this year. A lot of it's already due, and those people that have that debt that's due either have to sell or they have to refinance. Sales are down 90%, and refinance, you got to meet debt service coverage requirements, and they just don't. And the rates just aren't coming down quick enough. So we'll see what happens with this new change at the Federal Reserve, but it's going to be an interesting year, man, for sure.
Yeah, it's been, that we could take this a lot of different paths, right? Like we were talking about third-party property management and how, like for me personally, obviously there's market conditions of interest rates. There's, insurance premiums.
Costs have gone through the roof, man. I mean, I used to teach a 50% expense ratio. Forget it. 60% is where it's at now. I'm paying maintenance supervisors $40 an hour in some places. That's what, to get them, I had to pay it, which is insane. So, it's killing the bottom line.
All of those things have impacted NOI. And then your hands are tied behind your back because of interest rates. So now there's no exit strategy. If interest rates would have stayed low and costs would have risen, you still would have had maybe some sort of exit strategy or could make some things happen.
Sure.
But you can't do any of that stuff. So everything has been an adverse, perfect storm of horrible things happening to the multifamily.
Yeah, I told you,
sector.
my SEC attorney, I talked to him 3 weeks ago. He does syndications, and now he's doing workouts, and he got 6 foreclosure clients in one day on apartment complexes, okay? I don't know how many he's gotten since then, but, that's what's happening. And, I know we're doom and gloom right now, but there's also incredible opportunity. With crisis comes opportunity. And, I know people that are buying assets at, 60% on the dollar right now, and really nice assets. So I'll give you an example. I've got a 200 unit in San Antonio. It's on a lake. It's beautiful. Right next door is a 300 unit that sold for $43 million in 21. Or it might have been 22, 21 or 22, $43 million. Bank now owns it. They're down to 28. I'm not interested unless it gets to 24. Okay, that's what's out there right now because, it's all about cash flow. I don't care about that disparity in price. But 43 to 24 is where I'm at, which is crazy, right? But it's got a cash flow, and it still doesn't with the rates where they are. So, Be real. I hope we see some significant reductions in rates this year. I pray that Trump facilitates that, makes it happen, with whatever leverage that he's got. But yeah, I mean, there's a lot of pain, but there's also a lot of opportunity. And I tell people, not to immediately shift gears here, but I'm interested in senior housing. But forget senior housing for a minute. There's 10,000 people a day turning 65 in this country. A lot of them own businesses. Hell, you could buy businesses, and they got to sell, right? So that's an opportunity. And of course, this multifamily meltdown that we're experiencing really is an opportunity as well. So, it's not a time to wring your hands in fear and pain. It's a time to, to figure out what vehicle you're going to use and get excited and go out there and make it happen, right? That's my opinion.
So every statistic that I've read and every economic indicator and everybody, like I know people who are chief, like C-level executives at publicly traded commercial real estate firms and have these conversations all the time. Everything is indicating that the second half of this decade is going to be amazing for multifamily because of a lot of the things that you had mentioned, right? The obviously it's cleaned out a lot of the riffraff and prices have adjusted, and but more so than anything is, dude, there's a desperate need for affordable housing in this country.
Housing period.
Right now.
Yeah, housing period, not just affordable. I mean, we become a renter nation. People can't afford to buy houses. Trump's trying to put in the 40 or 50-year mortgages, which they've had in Europe forever, and we'll see how that goes. But, people can't afford to buy. I'm helping my son buy his house. I'm paying his down payment right now because I'm a grandfather as of 6 weeks ago. So, I'm helping him get going. Yeah, thanks. It's pretty cool. But there is opportunity. And to tell you something else, man, the whole AI component. I don't know if you heard Joe Rogan's last interview on Elon Musk. I'm sorry, where he interviewed Elon Musk on Joe Rogan. Elon basically said, if you work in front of a computer, your job's pretty much going to be gone in a couple years, period. So, there's a lot of people that are going to have to reinvent themselves and come up with, alternative ways to make a living. And so, if that's you and you're listening, don't wait for the freaking shoe to drop. Go figure out your side hustle right now. Like I said, I think there's an opportunity to buy businesses. Certainly there's going to be an opportunity to get distressed, discounted real estate. But you gotta, pick your vehicle and get going. Do it on the side while you're doing your job, so that you're not freaked out when the shoe drops. Because I mean, like Meta has already laid off a ton of people. So is Amazon. Those people are in the forefront of this stuff, and we're all starting to use AI. Hell, I just saw an interview with Elon the other day where he basically said that surgeons are pretty, why get into the medical field at this point? Because surgeons are robotic surgeons are going to be better than humans.
I had this conversation yesterday. It's like, what would you send your kid to college for today? If my kid was going to be a surgeon, that's gone. I just saw someone who had surgery here on the East Coast in the Carolinas. They had surgery by a doctor in California through Wi-Fi, utilizing a computer arm to do the blood clot.
Oh, no shit. Robotic. Oh, wow.
And guess what? Wow. That doctor's not going to be needed pretty soon either.
No, they're not. Robotics will be better than a human. There won't be mistakes. They'll have the absolute cutting edge, best technology, information in their CPU, and that's it. And so, this whole, it's going to be interesting. I mean, if there was, something to embrace right now, it's certainly AI, which we're doing. I mean, every possible way we can with the resources that I have. But again, if you're in that kind of a job and you think, I mean, I've got students that are one of my best students is an orthopedic surgeon, dentists and pediatric dentists and MDs and all kinds of things in my coaching program, and I think it's going to be a lot more of that. And so, again, not trying to scare anybody listening, but by God, don't close your eyes and be afraid of change, because change is coming, and it's the only constant in life, and it's coming fast right now. So, I would tell you, pick your side hustle, figure out what it's going to be, get started, because it takes time to get up to speed. So you need to start learning it now, getting around people that are doing it now, getting around peers, that think what you think is hard is easy. So when the shoe does drop, you're off to the races. You're good. You've reinvented. I've had to reinvent myself several times. You too, right, Tim?
Yeah, man.
Sure.
Yeah. Yeah.
So,
I mean, it's a constant refinement, right? If you are
right.
stagnant, like nothing in life is stagnant, right? Everything's either growing or dying. It's ripening or it's rottening, right?
Yep.
It's a constant flow state all the time that you're in. Sometimes you're on the top of the wave, and sometimes you're at the trough of it. And so you just have to be able to, manage,
pivot, move, duck and
where are you
weave,
in the
and
cycle?
yeah.
So let's talk
that's
about
it.
this. I want to go back to real estate real quick, and then I want to talk. I want to dive into all the other stuff that you have going on. But real quick on the multifamily stuff. So obviously all the costs have gone up. Obviously your hands are tied, or all of our hands are tied by interest rates. What are the controllables that you've seen people take on in real estate to then make a positive impact and try to turn lemons into lemonade in their
You mean an
existing
operator?
real estate deals that are struggling? Give me some tactical type things that people have actually done that you've seen happen.
Well, I'll tell you, we talked about property management companies. Unfortunately, I'm suing a company that's owned by people you and I know. We were together in a mastermind, and you know these guys, and it's terrible because they're friends. But I mean, they shit the bed so bad. I had no choice, and so. These third-party property management companies, a lot of them are terrible. They just are. And so one of the big things that I see is people taking the management in-house. So that, but you got to be there. You got to be close to those assets. And that's the biggest problem. And I think I mentioned this to you before we started recording. The most successful operators that I've seen are the ones that are vertically integrated. They have their own management company, maybe their own construction company, and they're geographically specific. They stick with one market. They own that market. They're good at it. Those are the best companies that I see out there. But that's one piece. Second piece is, obviously you've got to manage costs. You've got to watch your expenses. You've got to put everything out to bid because costs have gone through the roof. But I mean, it's tight asset management. It's literally digging into every KPI every week. What's the collections look like? What do the delinquencies look like? Why do we have those delinquencies? How's the leasing going? Why is it, looking for breakdowns in every stage of the leasing? Okay, we got 25 contact cards. How come we only have 3 tours? Okay, we have 10 tours. How come we only have 2 applications? You look for breakdowns in every single stage of the management, the leasing process. You look at your maintenance. One of the things that this management company that shit the bed is they weren't taking care of the tenants. We still have a huge rat infestation. They just didn't do anything about, so a ton of tenants moving out, and we didn't realize it because the leasing was going so good, but we were just maintaining occupancy. We weren't going up. So it stayed at an 80% occupancy, which paid the bills, but we didn't realize what was happening is the tenants were going out the back door as fast as they were coming in the front door. Shame on us. And I had somebody there literally on a weekly basis, boots on the ground, checking on it. We had everybody on the asset management calls every week, and we just didn't pick up on that until late in the game. And so, you've got to take care of the residents, period. So how long are the maintenance work orders out there? How long are these tenants waiting? And candidly doing tenant surveys. Hey, how we doing? What can we do better? And even do it outside of the management company. You send it yourself to the tenants and see what they say. Don't expect the management company to give you an accurate representation. But, looking at renewals. How far out are you on renewals? You've got, like right now, we're looking at April renewals, right? For sure. And because the biggest expense besides taxes and insurance is turnover. And so you want to do everything you can to minimize turnover. And so, incentivizing renewals. Hey, you get 500 off, or 1,000 off if you stay, whatever. Anything you can do to minimize turnover and minimize vacancy. Oh gosh, I mean, I could keep going here, but that's the level of oversight that an operator has to have right now. That meticulous oversight on every aspect of the business, to get through this. Because I'm in markets where there's been a ton of absorption. I'm in Nashville, I'm in San Antonio, and those markets are depressed because they built so many units. Now it's going to come back. They're fantastic towns that people want to live in, but we're going through the trough
population
right
growth
now.
hasn't been able to
Right.
keep up with the delivery of
Right. Well,
units. Like I was just in
that's it.
Nashville last week, and they're giving up 2 to 3 months of free rent for an annual lease being signed right
Yeah.
now
Yeah.
across the
Luckily,
board.
my
Every
asset there's
apartment.
luckily my asset there's in the 90s. Thank God. But yeah, we went through a rough patch there for sure. So it's all of these things. Making sure that the place looks fantastic. That's why I have a boots on the ground guys at each one of these assets to go by and see. Is there trash? What are the landscaping look like, and what does the paving, the parking lot look like, and so on and so forth. So, but it's all of that, bud. I mean, it's
I think
common sense stuff, but yeah.
Yeah, I mentioned this on my podcast before, but not to you. My dad shared a book with me that he read in like 1985, and he goes, "This is the best management book I've ever read." And it speaks to your point of exactly what you're saying about having the asset manager and boots on the ground. It's the book is called Management by Walking Around. It's just like, dude, guess what?
Wow.
You got to be there. You have to be
That's it.
on site, kicking tables, picking up trash, saying what the hell's going on. Why isn't the grass cut? Why isn't,
Right.
why is there a hole in the siding? Why is there a leak in the roof? Like, why aren't these things because
Yeah.
nobody will manage your asset the way that you have. And I like what you
That's
said
it.
about geographically pretty centric.
Specific. Yeah.
it- I was in 12 states, in multiple markets in 12 states, and it was just spread
Same.
way too thin. I hated it.
Oh,
man.
same. I was in seven. And it's, you're at the mercy of these third party property management companies and the employees that they hire. And I can tell you, and I learned this because I had to take over 23 of our assets that I had a nefarious ex-partner, embezzle money and all kinds of shit, and still dealing with that. But I had to take over the asset management of 23 assets in 7 states. And I discovered that the most important person in the whole mix is the on-site property manager. You can have a good on-site manager and a shitty management company, and that property will be okay. But you have a crappy on-site manager and a great management company, and your property's in trouble. And so, you live or die by the quality of your on-site manager. And so, that's super important. Yeah,
Have
I've
you guys started to
discovered that.
bring management in-house now?
No,
yet?
I don't have the infrastructure to do it.
It's a
No, not
massive
at this time.
undertaking. Yeah,
Oh, I know.
It's a
No,
massive
trust me, I know.
undertaking, takes up a ton of bandwidth, and it's a lot of pain up front, but hands down, it's one of the best moves that we've ever made. Like, we have real-time financials, we have real transparency into what's going on. Like, we are directly, there's always like this cog, right? There was the site level management team, then there's the third party management company, then our team's jumping on asset calls, and they can like get in the way, right? The third party.
Oh, not just get in the way. They'll paint a pretty picture, and it's bullshit. They'll bullshit
lies.
you.
It's straight fraud, right?
It is. Oh, you wouldn't believe some of the stuff we've discovered with this company I'm suing. I mean, they were literally putting illegal aliens in. They'd have approved applications. The person wouldn't take the place, and they'd pretend that person leased it and put in illegal aliens. I'm not kidding. There's 5 of those we've discovered so far. I mean, that's just one. I mean, I could go on and on, but I won't waste time with that. But yeah, I mean, that's the kind of nefarious stuff we discovered. And so, yeah, I mean, if you can vertically integrate, manage your own stuff, that is absolutely the best way to do this business. It's not always possible. And there are some decent management companies out there. And right now, the one we've got's not bad. But, it's a tough time. And so, I know we're all doom and gloom with this stuff, guys, but again, it's also a time of opportunity. Warren Buffett's famous quote, be fearful when others are greedy. They've been very greedy the last few years, but then the opposite one of that is be greedy when others are fearful. And there's a lot of fear right now. So now's the time to be greedy if there was ever a time. So, yeah.
Yeah, I agree. Going back to the housing deficit, there's 4 million housing units short. There haven't been a lot of builders. Yeah, there's been a lot of product hitting the market over the past 3 years, and that's what's kept everything kind of low value and no rent growth and painful for all of us.
But it's been cut off completely.
Gone. There's no deliverables. There's no deliveries of new product over the next 3 years. So that it's just going to exacerbate. All the reports are saying that rents are going to grow by 3 to 5%, normal rent growth at least over each year for the next several years. And not only that, but like, you couldn't build housing for what you can buy it for today, right? Like, you can buy C-class, workforce, pretty well located housing And for 50, 60, 70,000 a door, maybe 100,000 a
Yep.
door, depending on the market that you're in, go in,
Yep.
put some really nice finishes in, and be able to compete with somebody who has to rent for $2,000 or $2,500 a month. And you can go in and at $1,000 a month rent and attract a lot of really, really good tenants at a substantially lower price point and stay
Agreed.
full. You
Agreed
know?
completely. Yeah, agreed completely. I just told you that example, that one next to us. I mean, that's 85 built. My place is 95% occupied. They're both on a lake. It's beautiful, and that's what's out there right now. And so it's a tough time for the operators that bought in 21, 22, and 23. I mean, a lot of them have been decimated, but it's a great opportunity for people getting into the business, and so. If there was ever a time to get in, I would say it's right now. I mean,
Oh man, I've seen a huge
notwithstanding
opportunity in
that.
small multifamily for
Oh,
some
for
people
sure
getting
too.
started, like going
Yeah,
and
for
buying a
sure
four
too.
unit, house hacking it, or
Yeah,
like
my
I'm trying to get
daughter just bought
sister-
a triplex.
Yeah.
It's a complete piece of shit. My maintenance guy's up there right now, actually, but it's in a great area, and I'm proud of her, and she's finally doing it. So yeah.
I love it, man.
This episode of the Legacy Podcast is brought to you by Smart Management Property Management Software. If you own rentals or operate a real estate business, you don't need more deals. You need more clarity. Most operators are leaving money on the table, not because the asset is bad, but because the operations are loose. Rents, expenses, payroll, maintenance, it's all spread across systems, spreadsheets, and inboxes. Smart Management brings that together in one place. It gives you real-time visibility into your cash flow and operations so you can tighten up what's already working. When you see the leaks, you fix them. And that's how you make more money on the properties you already own. No guesswork, no waiting on reports, just cleaner data and better decisions. If you want to run a tighter operation and pull more profit out of your existing portfolio, check out Smart Management. Links in the description. Now, back to the episode.
No, I think there's huge opportunity. We were talking offline some things that I'm doing. Obviously, we have our property management software, which attacks every single line item on the P&L, and it obsesses over optimizing net operating income and then therefore asset value, and so provides a ton of resources and stuff. So like that's been a big deal. We vertically integrated, brought management in house on 70 to 80% of our portfolio. How are you seeing conversations with lenders? Are lenders playing ball? It seems like they've been extending and just like kicking the can down the road. But I feel like
their catchphrase is extend and pretend. That's their catchphrase, but I will tell you,
as
they
much
are
as they can
starting to
milk you on
foreclose.
money, and as long as you keep on contributing and making the protective payments on mortgages, like why wouldn't they? Like they're going to take a bath on it, like this Texas deal that you're talking about. They don't want to lose $18 million. They'd much rather just milk it, see if the market comes back, and continue letting their note get paid, I would think, right?
Well, that's what's happening a lot. Some lenders are enough is enough. We're taking it. The lenders I know that are doing that actually own assets. They're more almost kind of quasi-private lenders. But I mean, the minute they foreclose, it hits their balance sheet, kills their public, balance sheet. So, they push as far as they can and as long as they can. But yeah, that you're exactly right. If they can get the GP team and the investors to contribute money to keep things afloat, that's a better win for them than to take the property back. And like I say, extend and pretend. That's the catchphrase. So it really is lender by lender, Tim. I mean, I've seen lenders that'll bend over backwards. I've seen lenders that are like, nope, we're foreclosed, and some of it's just stupid. They're creating problems in some cases by putting unreasonable demands on borrowers, and honestly, I see it a lot with Fannie and Freddie. Believe it or not, I mean, it's just some stupid crap that they're doing, and this is not the time to be doing that stuff. And so it's just. But they're government employees.
It constrains the project. What I see is like, they put cash management accounts in place or lock boxes, and all it does is it constrains money from being allocated to the asset. And you're not you're treating a symptom as opposed to the disease, right? The disease is occupancy. The disease is the expenses. The disease is interest rate. Like let's treat occupancy and then let's attack all the different expense line items in order to try to reduce those and amplify income. And that solves the problem and puts everybody in a safer position. And they're like, no, we're just going to handcuff you, take all the money away. And it's like, what the hell?
Well, they're going to end up with those assets. And so they'll be heavily discounted. They'll heavily discount them when they sell them, and they'll go up for auction or whatever. And there'll be some great opportunity. I mean, I've interviewed people on my show, and just to brag, I'm blessed now. I'm pretty sure I've got the largest real estate podcast pretty much in the world at this point for commercial real estate. And I've had huge operators on my couch here in my studio, and they're buying assets at literally 40% off cost. I mean, it's incredible deals they're getting. And so, again, I try to look at the cup half full instead of half empty. It's doom and gloom a lot, but if you know my story, I lost $50 million in 08 and 9. Okay. I got crushed. Okay. By that wave. Well, I'm surfing this wave. Okay. I've made a lot of cash. I'm ready to buy. We're being very picky, but I think this year there's going to be some extraordinary deals. I'd love to buy that one next to the one I have. Good God, I have 500 units next to each other on a lake. But the numbers have to make sense. It's all about cash flow, period.
Yeah. Yeah. I find, people are being a lot more disciplined now, which is great. It was crazy, man, for a couple of years there. And it was unrealistic, and it
was just like the lead up to 08 and 9. It was just like the lead up to 08 and 9. It's the same, that frothing, that irrational exuberance. It's the same thing that happened these last few years, and yeah, here we are. But
couple market changes, man, and all goes sideways. But I think I think the other thing is that I'd love to convey to listeners is, like, guys like you and me, we actually care, and we don't want these properties to go back to the bank, and we want to fix it, and we kind of get emotional in the process. But these lenders, when you're talking about lenders taking properties back, dude, it's a freaking number on a spreadsheet for them. They don't get, it's not their personal money. Especially Fannie and Freddie, dude, this is taxpayer money that's being lost. This is money that they do not care about. And they don't get emotional about it. So it doesn't help us to get emotional, like, in response to it. Like, you have to look at it from a perspective of, like, data, not drama. Let's just focus on what are the numbers, what are the numerals. Hey, I understand what your needs are. I understand what our needs are. Our needs are, I don't want to lose my equity investors' money and my own money that's in this deal. So, like, if you extend this loan, or if you, modify the terms or whatever it looks like.
Or back off and quit making our lives freaking miserable.
Yeah, or just pump the fucking brakes for 6 months, right? Like,
right.
Just let us go and operate this thing. Here's the plan, but you have to bring a plan in place.
When you're talking to a lender, you have to have a plan. In fact, we do all of our lender communication through another lender at this point, believe it or not. We pay them a monthly fee to help with that lender communication, because that keeps the emotion out of it. Yeah.
Yeah.
And they handle the reporting. They handle issues like, this moronic lender wants us to do some things to the parking lot which absolutely aren't needed. We tried to fight it, but we're doing it. But things like that, and requests around data that they require, and they're doing it for us just because
that's a good idea, because guess what? Personalities get involved, right?
Well, they speak the language too. Yeah, they speak the language,
and they might have a relationship with them that they already have, and they've known each other for 15 years, and that can carry a lot more weight than some stranger reaching out to the bank and saying, "Hey, here's why I'm such a good guy." I like that. That's a good strategy.
Yeah.
So that's good, man. I think here's the other thing is kind of going back to the supply issues, the cost to build issues. We've had conversations over the past about 30 days with multiple cities on doing condo conversions. Like, I literally was on a phone call with a city Wednesday last week? And I said, hey, here's what I want to do. I want to create more affordable housing, right? I want to take my apartment building. If you guys can just approve the zoning change to make it into condos, I'll take care of all the legal work and all this stuff. They're like, we've never done a condo conversion before. What are you talking about? Because it's been 20 years since anybody's done one, right?
Right.
But they're like, absolutely, we desperately need affordable housing, and nobody's building it because you can't make any margin on a $100,000 apartment or condo, right? So if I can do this on a couple, and some cities are much more flexible than others. Other ones want us to put like individual water meters on every single unit from the street, which would cost us an extra $10,000 a door, which isn't feasible.
You got to pay the impact fees. Yeah, that's crazy.
But the other ones are like, yeah, what do you need? We'll contribute. We'll give you a tax abatement. We'll go through this process with you. Now, so that's one hurdle you have to figure out. One is is a city willing to play ball? Another one is your current lender, right? Your current loan probably isn't a condo conversion loan. They do exist, but you're going to have to probably refinance with this intent and be able to have a really good story to get the leverage that you need in order to then do this condo conversion, in order to then exit on an individual parcel basis. And then the other thing is, who are the buyers, right? If you can get the tenants to be homeowners, can you get a letter of intent? Can you get a purchase agreement? Can you get them pre-qualified on financing terms? And what does it look like if they don't have the down payment or they don't have the amount of money that they would need to bring to closing? Can you give them credits? And what does the lending world look like?
Oh, yeah. Wow.
But I think it can turn some things around for a lot of people in some really, really tough positions, right?
So I don't know. What you just described sounds pretty onerous, I'll be honest, from a bandwidth standpoint, from making it happen standpoint, from an execution standpoint. It is a tremendous amount of work. Yep. And the biggest piece, the biggest hurdle that I would think you're going to encounter besides the lender, well, you got the city, you got the lender, and then you've got the people actually able to buy, is those down payments. Will they allow you? I think you'd probably have to. You couldn't backdate a credit but if you started giving them a down payment credit for every month that they're in the property, you'd have to start that clock at that time and then, wait a year until they've built that up or something. Drop your rent. Yeah. I mean, it's doable.
I mean, here's the thing. You and I haven't been in the single family world in a long time, but
right.
From what I remember in single family, I thought sellers could give credits for down payments.
Oh, yeah. No, I did it. Dude, I did it. I had 800 houses, man. I had 800 houses when I crashed and burned. And I did lease options. I gave tenants an option to buy. They paid, $2,000 or $3,000 for that option. And I gave them a monthly credit towards their down payment. I did exactly that. I sold 118 houses in a 2-year period that way. So yeah,
I like that. No, I think that's a good strategy. I mean, don't get me wrong. There's a lot of hoops. The good news is I have a lot of runway and pretty low leverage on a couple of these deals that I'm that I'm into. But I had to bring more cash, and so like from a cost basis, we're at like a break even, and this could turn a break even or maybe even a little bit of a loss into a big winner for us. And if it works on a couple deals, it could work on several others.
You got to have, I think, there's some nuances here as well. I mean, I think they pretty much have to have washer dryer hookups and, things of that nature. Maybe not, but I feel like that's probably, I feel like that's probably a piece. When I think about the condos.
Egress windows, making sure they're a certain size. Like there's some things like
that.
Well,
they all have that. I mean, most apartments have, well, no, if they're third floor. Interesting. There's a lot of nuances. I don't know if you'd be able to do FHA financing, and I'm just sitting here thinking through this. But my daughter didn't go FHA on her triplex; she just did some conventional Fannie related product. It looked like Fannie, but it wasn't. So, I don't know, man. It's an interesting idea. I'll tell you, back when the shit hit the fan in '08 for me, I had 800 houses, and I was actually looking at home sharing. Putting people in each bedroom, which is actually what my daughter's doing in this triplex right now. She's got 2 tenants, one in each bedroom, and she's making a lot more money than she would if she rented the whole thing. And I thought about doing that as an alternative. I thought about halfway houses, believe it or not, where the government pays to bring in, prisoners coming out of jails. I looked at all sorts of different things. But we're definitely doing Section 8 in some of our properties. We call it housing, but we're definitely doing that. I'm sure you are as well, huh?
A little bit. Yeah, we don't have it in many of ours. Our team, since we took management in-house, our leasing teams have been on point, and we've been
good.
We've rebranded several of our properties, right? Because management drove them into the ground. We put reputation management in place, which got our Google ratings and stuff way higher, which then drove more traffic, which then drove more showings, which then drove more applications, which then drove more tenants. And so that we're in pretty good shape on that side of things. Obviously the holidays were a bit slow, but
one thing I didn't mention when we were talking about these different KPIs is, the companies that I'm with, these management companies, use something called the knock report. I'm sure you're familiar with it, but it measures how fast someone responds to an inquiry. And we found that if they stay above 90%, it makes a huge difference in leasing. And so, that's another metric that's super important. Yeah.
Yep. Yeah, I think we've been working on our software, but like the thing that I keep on coming back to is like there's always a kink. There's always like a knot in the system or something that slows down the process. And whenever there's a human interacting, it always creates some sort of a slowdown, or if they're not responding until the next day, and somebody's like in bed at 11 p.m. And so like we have some integrations on that stuff in order to follow up with AI agents and just making sure that information does exactly what you're talking about. So
yeah,
I want to make a quick pivot. I want to move over to the senior housing that you're doing now.
Okay.
So
listen.
Talk a little bit about senior housing. Talk a little bit about the market. Talk a little bit about the deals and the opportunity there. And what not scares me, but it seems like there could be some liability in that.
There's huge liability. We don't do the operations. I don't take care of grandma. We buy the real estate and we partner with an operator, like a management company. It's similar to that. So it's a different model. But I mean, there's 10,000 people a day turning 65. I'm one of them. I turned 66 a month ago. So and there's like 8,000 or 9,000 people turning 75 every day, every single freaking day. And so they call it it's a tidal wave. They call it the silver tsunami. And so there's a huge shortage of beds. In fact, they have to massively increase new construction consistently every year for 10 years to try to keep up. And I don't think it's realistic, honestly. And the cost to build these per bed is in the $200,000 to $250,000 per bed range. We're finding facilities that got crushed in COVID for 100 or sub 100 per bed. And so the returns are fantastic. I mean, I raised money for the first one I bought 3 months ago. I raised the money in 2.5 days. I mean, it was easy. And so, it's got a lot of sizzle and it's real.
Could you convert an apartment complex into doing this? I'm sure there's a whole bunch of
I don't think so. You could do it into I don't think so.
Stuff.
You could do it into independent living, but if it was ranch style, maybe duplex style apartment community, possibly. But definitely not any stairs. Forget the stairs. But I mean, I've seen hotel conversions. into multifamily as well as assisted living, because they already have a kitchen, for the assisted living piece. But what we do is we're interested in independent living, where they have some resources, but they're not being helped to eat and get out of bed and go to the bathroom. And so independent living, then it's assisted living, and then the next stage is memory care. And so those are the three components we're interested in. Then beyond that is skilled nursing, which is almost like a hospital. It really is a hospital. And so we're not interested in that. So independent, assisted living, and memory care. And so, I'm excited about that new segment that we're getting into. I'm still very interested in multifamily. I teach multifamily, but my boot camps, I teach that. But, with my coaching community, I'm now teaching senior housing. I'm teaching, self-storage, student housing, industrial flex. I'm teaching every asset class for the most part at this point.
How can people learn about that, by the way? Why don't you?
Thanks. Yeah. So I do a boot camp every month and a half. It's virtual. It's on the weekend. I don't sell anything, and so it's 2 days, and you come for $47 freaking. So no excuse, okay? And so if you're interested, go to rodslinks.com, rods plural, links plural.com, rodslinks.com. You'll see my boot camp site there. There's, I give my deal evaluator software, my document library. I give free courses. I mean, the bonuses are worth thousands of dollars, and you come for $47. So it's no excuse if you're interested in doing commercial real estate of any kind. That's what I teach, and I spend time on mindset. There's a reason my students are so successful. I don't know if I've said this I know I said this before we started recording, but my coaching students now own, I believe, around 300,000 units. We're counting, and we're well over 270,000. I know we're missing a ton. And so I think it's around 300,000 units. And that's more than every one of my competitors combined, which I'm very, very proud of. And so, but regardless, I don't care if you learn from me, but if you're one of these people that's sitting on the sidelines, you're not really where you want to be financially. Maybe you've got a good job, but it's not where you want to be. Decide on your side hustle now, because, or maybe you're one of these people whose jobs could be in jeopardy with AI. I mean, I'll tell you, I think a lot of jobs are going to be gone within 5 to 10 years. I think it's inevitable, and maybe faster. So, don't wait. Get up to speed. If it's real estate, get your ass to my boot camp. If it's learning how to buy businesses, go learn that. Whatever it is, go learn it and do it soon. Don't let the shoe drop before you're up to speed. Would be my comment.
I love it, man. And I've spoken on Rod's stage, and I was part of his mastermind for a few years there. And great people in the room. A lot of people doing deals and taking action, and a lot of access to capital, a lot of access to deal flow, any sort of resources, partners, boots on the ground, all that stuff is there. So definitely check that out. We'll put it in the show notes too. But Rod,
Thanks,
we'll
buddy.
close out with this. Give me the next 36 months. What's the big goal, the big ambition that you have in your business, your life over the course of the next 36 months that you really see opportunistically?
Well, I will have a dozen senior housing facilities in the next 18 months. I've got somebody cold calling them. We've got a whole team put together, so that's definitely going to happen. I like I said, I've been invited to join in on this fund to buy distressed multifamily assets. There's a SEC attorney that gets a lot of these foreclosures that wants to buy them, and so they've invited me with my megaphone, with my podcast and my social reach and all that to, help raise money for that. So I'm very excited about that as well. So we'll be buying some distressed assets, and then just keep teaching. I love what I do, man. I get love every single day, and this is not hyperbole. I literally get DMs, emails, I've got a wall in my office in my other building here at my compound with literally hundreds of thank you cards from students and whose lives have been impacted by my work, and it's my greatest blessing. So I'll continue to do that. I freaking love it.
I love it, man. No, you give it a lot of heart, and it shows. So thank you for doing what you're doing and making an impact in the multifamily community. And always good to see you. It's been way too long. I'm glad we got to reconnect here and hopefully get to connect in person soon. I know we were talking about just getting a couple high-level folks together and matching up at some point over the course of the next couple months. I think we definitely need to do that.
We need to make that happen for sure, brother. Yeah, we need to make that happen for sure.
Awesome.
Great to see you, buddy. Thanks.
Rod Khleif, I appreciate you being here, brother, and I appreciate you listeners being here. If there's anything that we can do in order to support you on your journey and growing your entrepreneurial business, real estate portfolio, you name it, don't hesitate to reach out. Here to be a resource and to point you in the right direction and give you the insights and help shortcut all the different learning lessons that I've had to go through and the money I've lost. So that way you don't have to deal with the same thing. So appreciate you guys being here. We'll see you next week on the Legacy Podcast.